Price is moving higher, but structure is getting tighter. And that difference is where most traders get confused. Because visually, the chart looks active. Candles are moving. Levels are being tested. Momentum appears. But under that movement, structure is compressing. Now we start from the session sequence. The March 23rd Asia session formed near the lower boundary of the March 20th US session. That location matters because it is not random positioning. It is a structural reference. At that boundary, price did not continue downward. Instead, it stabilized. It held. It rotated. This is the first signal. When price stabilizes at a lower boundary, it creates the condition for rotation back upward. Now from that stabilized region, price begins to move. It moves upward into the March 23rd US session, and it tests the upper boundary. At this moment, it looks like continuation. It feels like continuation. But we must separate feeling from structure, because movement is not continuation. Continuation requires persistence. Now we move into the March 24th US session. This is where structure becomes clearer. The session does not form above the prior high. It does not form outside structure. It forms between midpoints. Between the midpoint of the March 23rd US session and the midpoint of the March 20th US session. This is critical. Because when sessions form between midpoints, they are not expanding. They are compressing. Now price interacts again with the March 20th US session box. This is repeated interaction. And repeated interaction tells us something very specific. Structure is absorbing movement, not extending it. Now we move to the March 24th Asia session. This is where density increases further. The session forms at the midpoint of the March 24th US session and overlaps with the March 23rd Asia session region. Now we have stacking, not separation. Multiple sessions occupying the same area. Now price begins to move upward again. It tests the upper boundary of the March 24th US session, then continues higher, and tests the upper boundary of the March 23rd US session. Now visually this looks strong, but structurally this is very different. Because price is not moving into empty space. It is moving into layered boundaries. This creates friction. Now define the environment clearly. Sessions are overlapping. Boundaries are stacking. Interaction frequency is increasing. Distance is shrinking. Moves still happen, but they complete faster. Reversals happen quicker. Continuation fails more often. This is the signature of structural compression. And compression always follows expansion. Yesterday provided expansion. Today is processing that expansion. If price remains inside these overlapping session zones, compression will dominate. If price begins to hold outside them, expansion resumes. Right now, structure is tightening faster than price is resolving. Now we move into execution, because this environment requires precision, not aggression. The mistake most traders make here is simple. They see movement and assume opportunity. But movement alone is not opportunity. Opportunity is defined by structure. Now we break this down using the 5 axes. First is time. Time shows us session formation. And right now, sessions are not expanding outward. They are forming inside previous sessions. March 23rd Asia overlaps with March 20th US. March 24th US forms between prior midpoints. March 24th Asia overlaps again with prior Asia. This creates a layered structure. Time is compressing space. Second is volatility. The 20 BollingerBands expand during the US session, but that expansion does not sustain. The lower band closes upward. Then both bands begin to contract in the Asia session. This is not stable volatility. This is unstable expansion followed by contraction, and that behavior reduces continuation probability. Third is position. Price is inside structure, not outside it. It is interacting with multiple session boundaries. This means there is no clean directional location. Price is neutral. Fourth is pressure. Momentum appears, but it fades quickly. Slope is inconsistent. This tells us there is no dominant side controlling price. Fifth is liquidity. Liquidity is concentrated at boundaries. But boundaries are now close together, so liquidity events overlap. This creates noise. Now we translate this into execution. If price approaches the upper boundary of the March 23rd US session and fails again, then rejection probability increases, because repeated tests weaken continuation. Now consider the lower side. If price moves back toward the March 20th US session lower region and stabilizes again, then rotation continues. Now the key condition. If price holds above the upper boundaries with persistence, then structure shifts, and distance becomes available again. But without persistence, movement remains unreliable. Now connect behavior to structure. Moves extend, but they do not hold. Pullbacks deepen. Continuation fails. This is compression, and compression punishes late entries. Execution must be selective. Entries must occur at structure, not inside movement, because inside movement there is no edge. Now we define forward conditions, because structure is approaching resolution. The March 24th Asia session is now interacting with multiple upper boundaries. It is testing the March 24th US session upper region, and also testing the March 23rd US session upper region. This creates a layered resistance structure. Now the question is not direction. The question is acceptance. Will price be accepted above this structure, or rejected back into compression? Now define the scenarios. First scenario. Price holds above the upper boundary of the March 23rd US session. Not just touches, not just wicks, but holds. If that happens, structure transitions into expansion. Distance increases. Continuation becomes valid. Second scenario. Price fails to hold above the boundary and returns into the overlapping session zones. If that happens, compression continues. Rotation dominates. Distance remains limited. Execution becomes more difficult. Third scenario. Price fails more aggressively and moves toward the lower boundaries of the March 20th US session. If that happens, structure shifts downward, and previous support becomes resistance. Now connect again to the 5 axes. Time shows continued overlap. Volatility shows expansion attempts, followed by contraction. Position shows price inside dense structure. Pressure shows no sustained dominance. Liquidity shows repeated activation in tight zones. All 5 axes confirm the same condition. This is not a breakout environment. This is a compression environment. And compression environments are deceptive because they create movement without follow-through. They create signals without persistence. Now the final insight. You are not trading movement. You are trading acceptance at structure. Acceptance requires persistence. Persistence requires holding beyond boundaries. Until that happens, structure continues to compress price. And execution must remain disciplined and conditional.